Hey everyone, I want to take this time to make a video on one of my signals. It's one that I talk about a lot. It's a buyer and seller failure signal. The reason I like the trade is because it's very high probability, it's extremely low risk, and it's a very high reward trade. And you're able to reduce that risk to break even or one tick above entry extremely quickly if the signal is valid. Now, a couple rules that I have for this trade is in an uptrend, you only take seller failure signals. And in a downtrend, you only take buyer failure signals. The way that this signal looks is you have swing lows being set on, for example, this chart on the 5-minute, and I draw a horizontal line once we're in a trend and we establish these swings. Now, earlier in the morning, we broke out of this little consolidation area, and after that happened, we had three seller failure signals. Now, the way that it looks is you draw these lines, like right here, for example. If you were looking at the chart like this, normally a trader would look at it and say that the market is overextended to the upside and we should retrace. Now, this is yesterday's high, this dark green line. So, and this is the open for today. So the assumption that most people would have is we're going to retrace back to the open, test it, and continue upward. Now, in a strong trend, you don't want to assume anything like that. So what you look for a reversal pattern, which is also a signal for me to reverse to the downside, is a lower high being put in or another attempt at the highs and failing and breaking swing low that was set. Now, this is usually when people are trailing positions, they're trailing lows of swings, and they're going to get stopped out. And a common thing that a lot of traders see is they get stopped out and the market continues in their favor as soon as that happens. So what I try to do with this signal is to capitalize on that and actually enter when a lot of the smaller traders are getting stopped out and bigger traders are actually getting in on those moves. So the way it looks is you break that swing low by a tick or two ticks and the market continues in the direction. Now, to see another setup of it, you would have right here, which was 1, 2, 3 reversal. This can be assumed to be a failure signal. And now, remember, the failure signal is the same as the 1, 2, 3 reversal signal, except it's when a 1, 2, 3 reversal fails. Now, when that fails, it's usually a very high reward trade. So, looking at this trade, what I don't do, the times that I definitely do not take a position as a failure trade is when you have multiple candles supporting that level. So for example, right here you have 3 candles. That invalidates your seller failure signal, which would have been a break of that by 1 tick and then a continuation. What you want is a break of a single swing. So like right here, you broke the swing and then you continue to the upside. Then you broke this swing, you continue to the upside. Now, looking at what's going on right now, this is real time. If you took this signal to the upside, the seller failure signal to the upside, your stop would be above your entry price. Same thing right here, and then same thing right here. So if you took this early on seller failure signal, which was a break of this level, you would have been able to trail your stop up and maybe still have been in this trade. Now, remember, one of the main things is you don't want to take assume a failure of multiple levels of support. So like right here, a 3 candle support, you want to trade that with a breakout, so a stop limit to the downside. Same thing right here, right? 3 candle, 3 or let's say multiple candle resistance. You definitely want to trade that with a stop limit to the upside because there's a lot of shorts that have stops above there. So that's going to trigger sort of a frenzy to the upside. Now, what happens is you get those types of moves. So same thing right here. You don't wanna short that. Now, because the market is uptrending, these are better 1, 2, 3 continuation patterns rather than reversal patterns. So what you want to look for is the 1, 2, 3s to the downside that are breaking swing lows that are not multiple levels. So like I said before, it would have been right here, and right there. Now, one way that I, let's say, would like to confirm that, or to see, for example, right here, why this is valid, and this is a 3 candle support with a break to the downside, I want to show you what I use to confirm that. Now, right here, this is a Donchian channel set to 50 periods, and what I like to look for is support on the lower channel in an uptrend. So if this signal, like right here, which is the swing low that you're looking to be broken, is pushing the lower Donchian channel in, let's say, an uptrend like right here, you want to be buying off of the lower channel. Same thing occurs. I want to show you the 3 candle break. Same thing occurs right here, right? Pushing down by 1 tick and then to the upside. And then same thing right here, pushing down by a couple ticks and then to the upside. The 3 candle break is actually right here. That's why you don't want to take this as a seller failure, because it's way up here, and the assumption is that a stop limit sell is a higher probability trade than a limit buy with at that level. So that's the basis of the trade. It's low risk because you see that when you break that level, it might go a tick or two against you, and it goes in your favor. So for these types of positions, I have a very tight stop. I'm actually at usually 5 tick stop, which is reduced to break even or 1 tick above entry as soon as it goes in my favor. So for example, if these were taken, these breaks, you would have either met target if your target would have been within like 5 points or less. Same thing around right here. If you were at a 3-point target, 2.5 point target, you would have met target. If you had a much higher target, you would have been stopped out for probably $5 or $10 profit on these pullbacks. And that's the basis of the trades, of the buyer and seller failure trade. And to recap, I look for the signal on the 5-minute usually, breaking those swings. In an uptrend, I take seller failure trades. In a downtrend, I take buyer failure trades. And it's always confirmed with a position of price on the 4 range with a 50-period Donchian channel. And that's basically it. So if you guys have any questions, just send me an email or put a comment on this video, and I'll be happy to answer it. So good luck and happy trading.